All right, we've had several hundred more people join us in the last couple of minutes. When I say couple, I'm gonna slide that back about 30. Y'all tell me where you're from and what time of day is it where you are at? Because I'm not a big geography person, believe it or not, and I'm a redhead, so I consider myself fairly smart. But I just don't really know where it's at. I'm in Mobile, Alabama. It's only 6 here, so I live in Central, but I work in Eastern. So I try to talk and think in Eastern. All right. Midnight in the UK. See, that's tough right there, buddy. That is tough. All righty. As soon as I get the go-ahead from Silas, and I know that our recording is all set, I will change this over. Okay, yes, you will get a recording in the email. Jeanette and Silas, we are from DTI. Patience, we are from DTI. Back in the day, we worked for a little shop called DTI and had a good time there. And both moved and found other things to do with our lives for a little while. And for me, it was staying in the industry. I stayed in the industry, of course, and that's why I'm here today, but partnered up with Hubert Centers several years ago, and we started Trade Thirsty. And so I was used to running a trade room and trading and have been around it since 2000. I'm a futures girl, so my background is in trading the Dow, S&P, NASDAQ, Russell, DAX futures, trading the day market in the morning, using 30-minute time frames for setups, and then paring it down to day trade, pure and simple day trade, no holds overnight. And Silas is so helpful. I never traded bonds, Steve, never traded bonds. I did watch the bond as one of my bonds, the 30-year bonds, as one of my major indicators when it was pure inverse in those years. I mean, I know sometimes now they trend together or opposite, but back then it was no question about it. If S&P was going up, bonds were dropping. Bonds were going up, S&P was going down. Made it simple. That was a little pre-HFT day, how I got started. Frank, yeah, and everybody here, we are recording, and I recommend you stay in the room. Don't leave. Even if you have to step away for a second, don't sign out, because we will max out in capacity probably in the next 20 minutes based on my experience in running these webinars. And if you leave and then come back and you're locked out, I can't help you. You'll just have to wait for the recording. So I recommend you stay. And let me get this opened up and we'll go to our next presenter. So everybody says they can see PowerPoint, so I'm going to go with that. All right, so we're going to do something a little different here. We have typically had speakers in here that are in here teaching a specific strategy, sharing charts, and going over what's making money for them in the market. But this is going to be sort of a little shift change for us. So what I want you guys to do, first of all, I want to thank y'all for coming tonight. I'm super thankful that we can pull a crowd like this on a Wednesday night, and I know everybody's busy in their weeks, months, years, getting ready for taxes, especially in the U.S., but y'all took time out of your busy days to come hang out with me and Silas and Hubert and our speakers tonight. I appreciate it. So this is a first for Trade Thirsty, but we've managed to get a very special guest. He's going to give us some insight into what it's like to trade at a professional trading firm. We've never done this before. So tonight we're going to be hearing from Nick Bovell. He works at a professional investment firm. It's called Smile Trader Management. Has anybody in here heard of Jarrett Davis? Big FX guy. All right, so Nick works for Smile Trader Management, and he's one of their trading coaches. He is responsible basically for training the graduates and their junior traders as they come up through the ranks. So we invited him here. I mean, for me, I just really wanted for him to give you guys some insight into how these professional trading firms train their graduates, what they teach them when they're trying to create this group. They'll call it just a new group of successful traders that they put in to managing the money for them. So before we begin, I'm going to give you a little bit about it. Nick's company is part of a group that's fully regulated in the UK. So I know when you hear the word Forex, you go, what? Scary. I was trained to go Forex cowboy up. But so anyway, he works for this firm. They're regulated, and they manage about $250 million in client funds. So Jarrett Davis was the head of FX over there. And I know this guy for many years. It's got a fantastic reputation. He's ranked as the second best performing FX trader in the world by Barclay Hedge Currencies Traders Index, which is that's a pretty big stick to carry around if you have done your research about Barclays. It's very well known in the Forex world. A lot of y'all are going, yes, 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 yes. Fundamental trader, yes, yes, yes. So he's definitely got his reputation precedes him here. So it's not Jarrett that's speaking tonight. It's Nick, who works for their trading firm. And so if y'all just listen to him talk for a little bit, we're going to let him tell you a little bit about what those guys do over there and how they train their traders, what they expect, the setups they teach them. He's going to share some charts. And at the end of the session, you'll get a chance to actually ask Nick some questions. And if you're interested in trying to figure out how to trade professionally or just understand what these guys do, like for me, I feel like I'm just, it's a big black hole for me. When people go prop traders, professional traders in these big firms, I'm a retail person, traded my own money, never went into a situation like this. I'm very interested, which is why I reached out to Jarrett and had him send his guy over tonight. And I say tonight, for him, it's early in the morning where he is. He's 12 hours ahead of me. Nick is. And so I'm pretty interested to hear what he has to say. I hope you are too. I'm going to transition to Nick now. If y'all just give me just a second, I'm going to pull up, give him the, I call it the power, because these guys I give the power to sometimes, they mess me up and shut me down, but I'm not going to let them do it today. All right, Nick. So I've just given you presenter status. You should be able to, right now, share your screen. I'm going to make you the organizer so you can see questions and such. And if you get in a situation where you need help with the questions, I can read them out to you. But give me a mic test. You should be able to go live and give me a shout. Let's give him just a second.
Guys, yeah. Can you hear me?
Oh my goodness, your accent. Yes, turn it up just a little bit for me.
Okay, I'll just find out how.
There you go. Boom. I think we're there.
Is that better? Can you hear me clearly now?
Might be pinging out just a hair. Turn it back just a dial. Everybody, y'all tell them what you think. You just start talking, Nick, and we'll see if we got it.
Okay. Well, thanks very much, Jeanette. Yeah, guys, let me know if that the sound's okay.
Sounds perfect.
Yep. Okay.
All right. I'm going to mute, but I'm right here if you need me. Okay.
Okay, thanks very much for that, Jeanette.
Sure.
So, yeah, hello to everyone listening. So as Jeanette said, basically the main premise of this presentation is to explain how anyone here can become a junior trader with us and eventually go on to manage client capital. So we're going to do that by giving you some insights into what it's actually like to work and train at a professional firm in the city, and then at the end we'll give you all an opportunity to ask any questions you may have. So as a prop firm, we have a very different approach compared to the big banks. At a bank, a trader's day will mostly be spent executing orders on behalf of clients and dealing prices rather than trading the market themselves all day. Whereas at a firm like ours, we take full responsibility for finding and executing our own trades. In fact, that's what we do all week long. So first of all, let's give you a bit of background on who we are and what we do. Now, I'll just make sure you guys can see those slides. So at Smile Global Management, the group we belong to is indeed managing around 250 million in total. But the part of the business that I work in is focused mainly on training and incubating traders to feed them into the managed accounts part of the business. So we have various funds trading in different asset classes, but where I work is focused primarily on FX managed accounts for high net worth clients. Now, the reason we offer managed accounts is because it's the most transparent model available to clients, and also it allows them to keep all of their funds in their own name and under their own account. So they have more. They feel as though they do have more control over their funds. They can withdraw money, within 24 hours. They also are able to monitor the performance of the traders in real time on their own account, rather than just getting a monthly or a quarterly report. And they basically have complete control over their investment. So it's an extremely popular model, the managed account model. Now, a lot of people think that once you can make money trading, all you need to do is connect all the accounts together and have the best trader trading it. But that's actually a misconception that retail traders may have. In reality, as a firm, we are constantly searching for more traders to come through and searching for new talent. And the reason for this is once you're a successful trader, there's a strong temptation to leave a firm and go and set up your own fund and get your own clients. And this happens very regularly. So for us, there's a constant need to train and source new traders and bring them in through the ranks to replace the ones that leave. So this makes the training element vital to the overall fund, and by monitoring the new traders coming through, we ensure that they meet the standards that are required for trading client funds. So basically, our company is split into two pieces. We have the first piece, which is the investment management business, which trades all the client money. And then the second part, which is my area, which is the incubator, where we focus on training and sourcing as many new traders as we can. Now, this incubator assesses our traders' performance and monitors them in real time, and then if they are successful, passes them on to our investment management arm, where they sign an agreement and go on to become a strategy that we then offer to our client base. So my job is to work with all the junior traders coming through and to coach them and mentor them and assess them and to decide who makes the cut and who doesn't in the end. And basically, some people move up faster than others. There's no time restriction on how long it may take someone. If they're determined to become a professional trader, then it's just continuing to gain experience and practice. And basically, every large trading firm operates in a similar way. So we have some basic tests that we use when assessing junior traders coming into our firm, and we put everyone through a thorough training program before they ever make it anywhere near our trading floor. Now, the first step is to take them through a comprehensive training program. This program covers everything from what the financial markets are, why we even trade them in the first place, all the way through to specific strategies that our professional traders use to trade Forex on a daily basis. After this, we walk them through each trading session with a full brief from one of our analysts to help them understand what is going on and, most importantly, how they should be deciding which currency pairs to trade for the day. Then from this point, it's all about practice. So we give them full access to all the strategies, tools and resources that the professional traders are using on our trading floor, and then we let them trade their accounts while giving them any help and feedback they need. So as you can see, the process is very structured, but at the same time, the way our traders learn is based almost fully on actually trading and learning from the markets as they go. And we also have a route in for traders that are already successful and have a track record. And with these guys, we simply assess their track record, and if we like what we see, we then monitor their trading for 6 months, and after that we either fund them with a $100,000 company account if they don't have much money to trade, or we hand them straight over to our investment side of the business where they'll sign an agreement and be allocated client capital to trade. So for anyone listening that already has a track record, this is a great door into the industry that requires no upfront costs of any nature. So I'll just quickly go over how we operate, basically. You may or may not know that the very foundation of every professional trader is the knowledge of what is going on in the fundamental environment, regardless of what asset class they're trading. So, for example, we focus on currencies, and the fundamental thing that drives all currencies is what the central bank of a country is expected to do next with their interest rates or their monetary policy. So generally, the central bank will be expected to either increase the rate, cut the rate, or leave it unchanged. And as the economic cycle plays out, central banks react by adjusting monetary policy and interest rates, and then the currency moves accordingly. For example, if the bank is cutting the rate, then the currency will fall, and if the bank is increasing the rate, then the currency will rise. Now, if you imagine you know which way a currency is going based on this interest rate outlook or monetary policy expectations, regardless of any daily noise, this alone is very powerful information to know which way a currency will be trending over the medium to long term. So we always trade with these long-term fundamentals in mind and keep a very close eye on all the major central banks, along with what the markets are thinking in relation to the central bank's next move on interest rates. Now that's really important information. That, as we said, that's the foundation of what we look at, but that's not the only part of the story. As most of our trading is day trading, intraday trading, you know, sometimes we're getting in and out of trades within a few hours, maybe leave it on for a day or so. There's a lot of other factors that come into play that overlay on top of that foundation. So we're also constantly looking out for pieces of information that can move the markets in the short term on a day-to-day basis, and this is what we call sentiment. So you can have all different types of sentiment coming from various factors, whether it's intermarket correlations or risk-off sentiment if you're seeing declines in equities for whatever reason, maybe abrupt slowdown in China, you know, it can be anything. All these unexpected factors will influence sentiment on a day-to-day basis. And there's many things that we look for as a professional firm, and we have access to a lot of information that is really just incredibly useful stuff that a lot of retail traders just would never have access to. I'll share an example of what I mean. So one of these information sources that we have is order flows. So an order flow is basically when a bank or a broker leaks out where their biggest clients are placing their orders in the market. So you can imagine if you knew at what price the top investment bank's biggest clients were buying, say, the dollar-yen pair for the day, or imagine if you knew where the majority of clients at a large institutional broker were placing their stop losses on Euro-USD for the current session. These order flows constantly provide this information for the major currencies anyway, and because we have our own dealing desks in London, we can access this information and take advantage of it if we see a solid opportunity that lines up with our other analysis. So it's a very powerful tool, and we have a lot of little things like this that influence our trading in terms of the day-to-day sentiment. So our professional traders are using tools very different to the technical indicators that a lot of retail traders are working with. And the biggest difference, I would say, is that we're trading with information as our indicator rather than some visual indicator based on price that's overlaid onto your chart, because that's really only going to be backward looking. The information that we are getting our hands on is for and we had this massive rally of nearly 5,000 pips. Now, this is all associated with monetary policy divergence. So that's a key concept that we use to trade, and that is you'll have one central bank going in one direction with their monetary policy and another central bank going in the other direction with their monetary policy. So the start of this move was really driven by speculation that the Bank of Japan is going to have to begin a quantitative easing program. And as you can see, the market started selling yen all the way up until the actual announcement for the quantitative easing didn't come until this bar here. This is on the weekly chart, by the way. It didn't come till April 2013. And in the background, we also had the tapering, or the expected tapering of the US Federal Reserve's quantitative easing program. So their monetary policy was heading into a tightening cycle, while the Bank of Japan was heading into an easing cycle. And it's these kind of trends that are very powerful to get in on, especially if you get in on it early and you know that it's going to continue to play out. And certainly, you know, the Bank of Japan ended up announcing a second easing program in October 2014. And then, you know, there's still speculation that they will ease for a third time. Now, that's something that we keep a very close eye on. We're constantly watching core inflation from Japan and the Bank of Japan's own measure of underlying inflation to gauge the prospects of a further easing by the Bank of Japan. But this is just a long-term trade that some of our traders made a lot of money from just by knowing what the central bank is going to do. So that's one of the longer-term trend examples, and I can show you a more of a day-to-day trade example. This is on the Aussie Kiwi. So you might be able to see here I've overlaid the trade that I took onto the chart here. So what we have here is the Australian dollar versus the New Zealand dollar. This is on the hourly chart. Now, what happened here is this green bullish bar here represented the RBA coming out on March 1st and holding quite a neutral tone in their monetary policy statement. So that gave a bit of bullish sentiment to the Australian dollar. And then the following day, we had gross domestic product for the fourth quarter come out from Australia, which beat expectations by a very wide margin. It was 3% for the year, and it was expected at 2.5%. So that's very strong numbers from the Australian economy. And then again, just like with the dollar-yen trade that I just showed you, it's then a case of looking at the monetary policy divergence between two central banks. So we also had at the same time the RBNZ, that's the Reserve Bank of New Zealand, being expected to cut rates. Now their monetary policy meeting was due 8 days later on March 10, and this GDP release came out on March 2. So I bought the Aussie Kiwi knowing that it's a strong currency versus a weak currency, and that's what we're always doing. We're always trying to buy strong currencies against weak currencies, or vice versa, sell weak currencies against strong currencies. And then you've got two chances of the trade playing out in the right direction, because you've not only got the strength from the Australian dollar, but you've also got the weakness from the New Zealand dollar. And this trade played out quite nicely, held it for about a week or so. It continued to edge higher, and then we did get the RBNZ rate cut, which I was expecting based on our analysis within the firm and amongst our traders. The market itself was not fully pricing in the expectation of a cut in interest rates by the RBNZ. So that's why we saw this quite abrupt move of 200 pip upon the announcement. So, altogether, that trade was 325 pips approximately over a period of just over a week. So that's the type of trade that we do all the time. That's the type of trading that we're looking out for. And that's exactly what we teach our traders to identify and execute on a day-to-day basis. And that's how you become consistent, and eventually you can start managing capital. And once you're managing capital and you've got a consistent track record, it's really, the sky's the limit. It just depends on how large a size funds you want to continue to manage. So certainly some amazing opportunities if you dedicate yourself to learning these strategies. So I hope that to see a bit of what's going on the charts. Now I'll go back to the slide. Now, I will, you guys, for anyone that has any questions shortly. But before that, I'd just like to quickly summarise what's on offer. So, what we're looking for as a firm. The simplest way to get involved with us is if you already have a 6-month track record of performance. We can accept you into our incubation program, and there's absolutely no cost to this. You simply need to open your broker account at our specified broker, and then we track your trades in real time on our system periods. Now, if you don't have a successful track record yet, that's fine. You'd be in the majority. Our head of FX, Jarrett Davis, has made all of the training that we give to our graduates available to any retail trader that thinks they have what it takes to become successful. So this is really the highest quality education you can get in FX markets, because it is basically the same template that's used by almost every big proprietary trading firm in the city, and it consistently provides professional traders for us year in, year out. Now, because obviously there's a cost associated with this training, and because we wanted to cater to retail traders who have all different schedules and time commitments and geographical locations, we simply made the training into a monthly subscription model, so that you're free to take as little or as long as you want to build up your skills. Now, we don't really want anyone paying for this that can't keep up with the information, or if they figure out that they're not cut out for trading at a professional level. In London, we test every student coming in and reject those who do not meet our criteria. So in order to make sure that we can get to grips with the training in the end of the program, we give all retail traders a free 14-day trial to see for themselves how good the program is and whether or not it is for them. So after the 14-day trial, you will be charged $297, that's a monthly reoccurring charge. And that's just for as long as you stay on the program. And you can cancel your trial before the 14 days is up and avoid being charged at any point. No questions asked. So, if you stay on the program, then, you learn all the strategies and you have access to all the resources that we're using to make profits on a daily basis. You can see our monthly returns are very consistent, and you have access to all the same information as us, plus you have daily mentoring, and if you build up your record, you can then apply to us to go into the incubation program. And at the end of this 6-month incubation program, allocate you $100,000 of company money so that you can build up a track record on a sized account that is appealing to clients, because they really want to see a performance record on a decent sum. So we can provide that to you. And then if everything goes well, eventually we'd hand you over to our investment partners, where you'd begin trading client money, and from there the sky is the limit. So I'll let Jeanette say some words, and then we'll launch into the Q&A. So I'll go and have a look at some of these questions now.
All right, can everybody hear me okay? All right, man, Nick, I really appreciate you for the insight, and I see the questions are pouring in. So if you know how to read them, if you have any trouble reading them, let me know. But you should be able to scroll back. It looks like a lot of people are interested in the process. And so, like, in all my time here at Trade Thirsty, I guess I've never seen anybody make an offer to come in and let you be a trader in an active fund management business. I mean, never to retail traders, especially. I know they do a lot of due diligence when they bring those guys in pods and train them and teach them and then, put them on the front lines with the money. But, I expect most of the people here would probably need to get training before becoming incubated. I know I feel like I'm pretty darn good when I look at the markets and put my mouth on a trend up or down. But I think what you guys are doing over there is something that's on a grander scale. So for the guys that are watching, if you guys sign up with these guys, it looks like they're doing let me read this as it'll be a 2-week trial. 1 second. Yeah, okay. It looks like it's going to be a 2-week trial if you join them. They've got a link that they gave me. It looks like it's not on the slide that you are showing, though.
I'll get that other slide up. Hang on.
It looks like, okay. I made a link for them earlier because they had this really long link and they needed something short. So I had my team go put one together for them. Okay. That's how we roll over here in the South. We just help. Anyway, so they're making an offer for you guys. It looks like it's 2 weeks if you want to check it out. I'm going to let Nick get to questions once he gets to that slide. And we're going to go to some Q&A now. So you guys populate the questions in there. We've got a little bit of time here to knock those out. And so I'm going to let him get there, and then we'll turn it back to Nick. I can hear him clicking away over there.
Okay, yeah. Now, that's the one we want, is it?
Oh, show. I see it. Big, bright yellow, sunny south letters. All right, I'm going to mute so you can answer the questions. I see them piling in.
Okay, I will just scroll to these questions now. All right, so just getting to where I started the webinar. All right, sound is good. All right, here we go. Can US traders do this? Are you registered in the US? Do I need a Series 57 license? Now, anyone from any country can do this. What happens is, once you come through the incubation program, you'll become licensed under our umbrella. So Smile Global Management and the other investment partners are regulated by the FCA in the UK, and then any of our traders that come and trade client funds for us come under our umbrella. So it doesn't matter where you're from, you'll be regulated under the Smile management umbrella, and everything will be legit, so you don't need to worry about that. Okay, we've got Paul Tudor Jones in there telling us that he's the top Forex trader in the world. Well, you can certainly come onto the program, please. Is the trading online? Yes, Anthony, the trading is completely online. So the membership basically gives you 100% access to all our resources. Myself and some of the other analysts run daily webinars. So we have 2 webinars a day where we go over everything that we're looking at. The whole training course is online. Now, I think that's 20 or 30 hours worth of videos that our head of FX, Jarrett Davis, has made. And then you have our live news feed that has the all our sentiment updates, all the news that's going on at the time. You have an audio squawk. You have everything, and it is all online, Anthony. So you don't need to rock up to any physical locations. Now, Scott, what have you been doing about the yen? Hasn't that moved counterintuitively? Yeah, well, now that's the interesting thing about the Japanese yen. It's a safe haven currency. So despite the fact that we do have very easy monetary policy from the Bank of Japan, and we have done for several years now, as I sort of alluded to very briefly in the presentation initially, the day-to-day sentiment factors, they can override the longer-term fundamentals. And when I say day-to-day, these sentiment factors can last weeks and months. For example, look at the Great British Pound at the moment. We've got this risk of the Brexit, the referendum to leave the EU. Now, that is causing negative sentiment on the Great British Pound, even though the UK economy is one of the few economies that are actually considering raising interest rates in the next sort of 18 months. Aside from the US, there's no other central bank that's talking about raising rates at this stage. So you can see that sometimes the monetary policy situation and the short-term sentiment situation, sometimes they conflict, sometimes they go hand in hand. But what we've seen with the yen for the last few months since basically the turn of the year is safe haven flows into the Japanese yen, because we've had a lot of global risk-off sentiment, which we've seen declines in equity markets. Now they've recovered a lot now, but we did see that sell-off earlier in the year, and that's really helped the Japanese yen appreciate. Now the Japanese yen will always rally when there's risk of sentiment, and that stems from Sorry, I've just lost where I was with the questions here. But basically, the reason the Japanese yen is a safe haven currency is because the Japanese investors would traditionally have a lot of their investments offshore, and in times of uncertainty, financial uncertainty, they'd repatriate their investments, and you'd see the yen rally. So it sort of becomes a bit of a self-fulfilling prophecy these days, because it's a well-known fact that the Japanese yen is the go-to safe haven. Okay, so sorry, I think I missed a question here. Yep, the training is online. How do you mean work closely, Desiana? Well, work closely. By work closely, we mean that we have the daily webinars every day. So there'll be one for the London Open and there'll be one for the New York Open. So there's 10 webinars a week, and at the end of each webinar, everyone has the opportunity to ask as many questions as they want about what's going on. You know, you can ask a question about a trade that you've taken, or you can ask a question about a trade that you're looking at taking. We have a lot of interaction, and we give a lot of attention to every single individual's question. If they're having a problem understanding a certain aspect, because we really drill that into everyone. The most effective way to learn about how to trade the markets is to understand every move that you see. So if you see a big move in a certain currency pair, then you need to know why that happened. So then that fills your experience for next time. So we'll often get a lot of questions about, why did this currency go up, or why did this currency go down? Sometimes it's less obvious, the answer, and we go into detailed analysis of what's going on. So that's what we mean by work closely. And then, of course, if you're starting to show a decent track record, then we'll work sort of in a more of a capacity where we're talking about sort of funds management and risk management. Obviously, clients want to see very small risk. We basically aim in the funds management business, we're aiming for sort of 20 to 30% returns a year. Not what you'd be doing on your personal account. If you have your personal account with 10 grand in it, then sure, you're happy to make 10% on a trade. But as you get closer to managing real funds of decent size, we'll also guide you about the whole capital management process. Anthony, what we mean by the no upfront costs is if you already have a track record and you want to basically go into the incubation program, then it's not going to cost you anything. It's only going to cost you the membership fee if you want to go through the training and education program. If you don't need that and you're already a retail trader with a good track record, then for no charge at all, we can start monitoring your account for the next 6 months. And if you do well over the next 6 months, we'll allocate you $100,000 to trade. Okay, so where can the central bank's news be viewed as it's being released? The Fed this week. Okay, so every central bank has its own website, and that is where the statements and communications are released at the exact second that they're scheduled for. So everyone around the world, doesn't matter if you've got a Bloomberg terminal or you're using Reuters icon, it's the central bank website that you get the statements from. So when you want to read the communication from for example, as you said, the Fed this week, any statement from a central bank is going to be released on their website. So you should have all the central bank websites bookmarked, and when there is a monetary policy announcement, you should be there refreshing the page and reading the statement or reading the minutes or whatever other communication it is. You should be reading that as soon as it is released. Okay, so John, what is the most common time of the day that the order flow is established? Basically, it sort of starts at the beginning of the London session, and we'll continue to upload the information into our proprietary news feed throughout the London session and into the New York session, and then sort of by by sort of midday in the New York session, it dies off. So, you know, midday New York time, the order flows are dying down. So it's really from the start of the London session to sort of the end of the London session and a bit into the New York session. Okay, so Risa, how do you set your stop loss and target levels? Yeah, that's a very good question. Everyone sort of has their own way of doing it. What we like to do and what I teach, and it's been very successful for me, is using very wide stop losses. You know, I believe that if your analysis is correct in terms of direction, then you don't want to be getting stopped out by some silly spike. You know, there's a lot of noise that goes on in the markets. What we like to do is look at the average daily range of a pair and say that our stop loss should be approximately equal to the average daily range. So say on the Euro USD, you know, over the last 50 trading days, it's approximately had a range of 100 pips. So that would be my approximate stop loss. But that's not set in stone. It's not going to be 100 pips to the pip. That would be a very rough guide. And then you would place the stop loss outside key levels of support and resistance. But, you know, another example would be, say, if you're looking to trade the pound Kiwi, now that has an average daily range of nearly 300 pips. So you don't want to be using a 100 pip stop on a cross pair like that with such a big range. I mean, it's completely arbitrary. Any of these, you know, personally, it always astounded me when I first started trading a long time ago when I was told to use a set stop loss the same on every pair. Now that's bizarre because you've got the pound Kiwi, for example, moving 300 pips in a day, and you've got something like the Euro pound moving 60 pips in a day. So you want to base your stop loss roughly on the average daily range and then use key levels of support and resistance outside of that. And then in terms of target levels, that's a really tricky one. Where to take profits is by far the most difficult thing about trading. You know, getting into the trade, that's easy because you have a clear reason for it. Getting out of the trade, that's more difficult because you don't know if you're going to leave money on the table or not. So it really depends on the strength of the move. It depends on the reasons for which you entered the trade in the first place. So if it's just a day trade, then, you know, we just want to bank some profit. And we don't believe in this this idea of having a positive risk reward or anything like that. You know, if I have a stop loss of 100 pips on Euro USD and I see an opportunity to scalp 30 or 40 pips or 50 pips just because that's probably all that I'm getting offered by the market, then I'll take it. And I've only made half of what I risk, but it was the probability of me taking that profit was much higher than the probability of the stop loss getting hit. So where to take profits is a very difficult thing. You know, for example, with that dollar yen trade that played out over a period of years that we showed you earlier, I mean, obviously you'd hold that for a much longer time. So every trade's unique. That's what we really stress. Every trade's unique. Every situation's unique. And we don't have a set take profit template for every trade. All right, so Paul, you're up over 300 pips on the Kiwi USD from last week. Yeah, excellent trade. Yeah, we've got a lot of dovishness coming out from Yellen at the moment. The Kiwi's a good one to be in, especially if West Texas Intermediate keeps moving higher. So nice one there. Good to hear about that. So Jerry, who's cash? We allocate $100,000 from our fund for traders who have a good track record. Now, Roger, how many junior traders make the cut percentage-wise? It's difficult for me to say. I'd say that, you have a lot of people that come through the program, and it's an ongoing process for them. It's not like there's a time limit where they say, oh, you didn't make the cut by now, therefore you didn't make it. There's a lot of, we've got a lot of traders that are in the process of getting there, but we do have new traders making the cut, every couple of months. So yeah, putting into percentage, it's hard for me to say because I can't really quantify the pool that we begin with, really. Brian, how long does it take to complete the course? Well, the video course, as I said, I think it goes for about 20 or 30 hours. But in terms of the overall education, it's an ongoing thing. So you just pay the monthly membership fee and you can learn. So, some people will get really good within a few months. Others may take 12 months. It's really one of those things. It depends on how much time you allocate to it, and depends also to some degree how much prior experience you may have with trading or financial markets, and all these factors. So the course doesn't have a set completion time. It's really up to you what you want to do with it. Okay. Yep. Okay, what's the typical age of the junior trader? Well, there's really a lot of variation in that. It can be anywhere from early 20s to 50s. You're never really too old to trade. So yeah, we have a very wide range of members' ages. Okay, what is the percentage remuneration to the incubator trainee once they make a good trade? Okay, so each trader will have the ability to discuss their percentages in a individual manner, but basically the fund generally takes 30% of profits, of the client profits, and then that's generally split 50-50 between the firm and the trader. So it could be about 15%. Okay, Sean, you've been trading FX for over 10 years plus. Will I have to use your platform? No, you don't have to use anyone's platform. I use MetaTrader 4, and you can use whatever platform you like. Brian, does the student continue to get access to your trading tools after they complete the course? Yes, as long as you're, if you're paying the membership fee, then you have access to all the trading tools. The other route is you apply to the incubation program when you're ready, and you provide us with a 6-month track record. So they're the two routes. Mus, where can we see the performance of your fund? If you go to Smile Global Management, there should be some links there for performance. Roger, how do you keep track of all the data that comes out and all the data together, and how all the data together will affect policy? There are so many currencies, it would get confusing with so much data. Well, that's our job. That's exactly what we do. We put all the data together and we know what's going on. Once you've built up a picture of exactly what's going on in every currency. Now, keep in mind, we don't look at the exotic currencies. We only look at the major currencies, and that's only 8 currencies we look at. And once you have a full picture of what's going on in each country, in terms of their economy and the central bank monetary policy, then it's really just a case of only filling in the gaps with the day-to-day fresh pieces of news. Now, Jeanette, I'm aware that there's only 5 minutes left, so I will try and zoom through these questions. Is this a 6-month track record on a real account or a demo account? It should be on a real account, ideally. What do we do after 2 weeks? Well, the 2 weeks is just a trial period. After 2 weeks, you'll be charged the monthly fee. Apari Fund in UK has a similar program. Are you familiar with them? If so, no, I'm not familiar with the Apari Fund. I'm afraid. Do you need a license to be a trader? No, you come under our umbrella. We have the regulation to take you on as a trader, and you don't need to do any of your own licensing. Reese, you recently joined this. You trade Forex, so you're wondering if the live news has it so all you see is Forex news. Also somewhere you can learn what the terminology means, order levels. Yeah, okay, so if you do come into the program and you're in a webinar, we can send you a link about terminology. If you go to Forex Live, they have a link somewhere on their page where they have a lot of terminology. In terms of the live news feed, it is only Forex related stuff. The only time it will be non-Forex is basically updates that affect Forex, if there's big moves in commodities, etc., big moves in equities. Okay, Joseph saying the link does not have a free trial. Yeah, well, you will not be billed until after 2 weeks, apparently. Okay, it's telling you to pay $297. Yeah. There should not be a charge. I don't actually organise the back end financial aspects of the program, so I'm not sure why it's saying that. After 2 week trial, it's $297 a month. Yes, that's correct. No, there's no other costs. Are there any personal guarantees from us when we trade your money? No, but obviously it would be in your best interest to do well. We have risk management protocols that stop any ridiculously big trades being taken, etc. So you don't need to worry about that. Is the training for someone who has never traded FX before? Yes, it's perfect for someone who's never traded FX before. It really is, because you're not getting fed all the rubbish that so many educators put out there. Which country do we pay taxes on profits? Well, that would depend on your residency at the time. And if you're a resident of a certain country, then you're obliged to pay taxes in that country. Can we trade futures? We don't trade futures directly. No, we do look at futures in terms of gauging sentiment in, for example, New Zealand dollar, dairy futures, etc. Say we lose 30%, what happens? No, you can't lose 30% because we've got risk management systems that will stop that from happening. What percent profit do you take? It's 30% of client profits. You live in New Zealand, 12 hours from the UK. Would I have to trade through my night? Well, that's the beauty of the Forex market. I've been all around the world, and you can always slot yourself in to, there's always something going on. Obviously, the New Zealand Asian session is the sort of most quiet session, but you're going to be awake for 16 hours anyway. You can definitely find a session to trade. Is the program just for Forex trading or futures and options as well? No, it's just for Forex. I can guarantee that there's a 14-day trial. So if it's saying it charges you straight away, then that's incorrect. You'll get a refund. Okay, there will be no charge until after day 14. That's for certain. Is there any presentation slide? Yeah, the slide should be up. The training after 2 weeks is $297 per month. Do you trust the Fed and the economic data? Yes, I do. What is the referred time frame for your company for day trading? We don't really look at a set time frame. I mean, I'm usually on the hourly chart. If you mean time frame as in time zone, we're mainly kicking off from the London Open through until the midway through the New York session. Okay. Yeah, the typical of a junior trader, it really ranges from sort of 20s to 40s. No, you don't have to return money if you make a loss on the trading accounts. Yep, the training is $297 per month after the 2-week trial. Yes, we accept technical traders. If you're a technical trader, then you know your skills are really going to match up well with the fundamental stuff we look at too. Now, Jeanette, if I'm out of time, then just let me know.
Okay, I'm going to give you, if you want to just go ahead and maybe take one more question, and then we'll wrap up, and we'll switch to our next speaker. Okay.
Okay. Yes, Sean, we do use stop losses. Every trade has a stop loss. And then, you know, we're usually risking about 1% of our account on each trade. So, guys, I apologise. There's still more questions there that I haven't had a chance to get through. I'm sorry about that. But hopefully most of you had your questions answered. And thank you very much for your time. And hopefully I'll see some of you in our training program, and you can embark on the journey to become a professional Forex trader.